we want to support consumer businesses and improve people's livelihoods. We want to build models for Chinese livelihoods, Chinese consumption, and for many companies in the food and beverage, cosmetics, and restaurant industries. These companies create jobs and support people's livelihoods.
Finally, I would like to ask Mr. Song, from the perspective of an industry investor, to evaluate the current stock market, mainly the stock market, since the capital market is a broad concept, as well as the prospects for the future development of our capital market.
You are a veteran who has been operating in the capital market for many years. Actually, you are the most qualified to speak on this topic. So let me just offer a few of my own thoughts as a starting point. First, I wouldn't say I'm qualified to evaluate the market, but as someone who has worked in the capital market for 28 years, as a veteran in this industry, I neither hold out hope, nor do I approach it with a sense of disappointment. As I mentioned earlier, in a society that lacks modernity, introducing a modern capital market and trying to make it work well is extremely difficult. Fundamentally, from a structural perspective, it's essentially an imported concept, just adopting a form from elsewhere. But we haven't captured essence, system, or methodology. Personally, I've been in this field for 30 years, and the stock index is at the same level. I'm at retirement age. If I work another 10 years and retire, it might be at the same level. This is incomprehensible, isn't it? Secondly, I think the capital market is extremely important. I believe that the top leadership, including the country as a whole, has realized the role of capital market infrastructure and its supportive function for the future development of China's economy. It serves as a stabilizer, as a ballast stone. It is a reservoir, but we are not making good use of it, nor are we utilizing its stabilizing function. This ballast stone is not being used. Instead, it often brings us risks. As soon as something happens, the National Stabilization Fund is called upon to accumulate hundreds of billions, even up to 1 trillion yuan. Just last week, Huijin Company entered the market and bought shares in the big four banks, purchasing several hundred million yuan worth, on average, about 100 million yuan per company. This is a form of market rescue. We rescued the market in 2015, and we have to do it again. In 2017, the market was rescued, and in 2018, the development of our capital market, our stock market, hinders national economic growth. So of course, I think last year's inspection team's conclusion about the CSRC was also very clear. Let me repeat it again. I feel that there is not enough understanding of the national economy, not enough support for the real economy. And now, what about finance? The grasp is not sufficient. Whether you implement a registration-based system or an approval-based system today, both require comprehensive and in-depth participation in the construction of the capital market and stock market. In fact, it is even a leading concept. But that's just the same old story, the same cliches we've heard time and again. Acting as both player and referee cases like Xiangqian's, these incidents, air conditioner sales, no matter what assets they're selling, they can be sold 2 or 3 times. Meanwhile, good companies can't get listed. People say, we need to break the bottleneck, support China, technology, but it's not like the Chinese population should tighten belts to support chips or breaking bottlenecks. How many people can these bottleneck projects help? How many jobs can they create? How much tax revenue can they generate? Look at our 4 AI unicorns. If you take away their to-government business, they barely have any to-consumer business in the market. You can't say they have none, but they're all struggling. They pay value-added tax, but many have never paid income tax. So if we're counting on these industry leaders to stabilize livelihoods and support the 6 stabilities and 6 guarantees, that's clearly unrealistic, right? So when it comes to the structure and development of technology, consumption, and the capital market, we need to think carefully. We can't give up eating for fear of choking, but at the same time, we can't do whatever we want. When those at the top have preferences, those below must be cautious. This approach really shows a lack of understanding of the capital market and fundamental role. The real economy shouldn't be discriminated against, draw arbitrary boundaries. As for red, yellow, and green lights, deciding which is a red light, which is yellow, which is green, which things can be done and which can't, that's something the market should determine. I think this is completely normal. I really don't know what kind of situation, what kind of policy, what kind of system, or what kind of original intention would lead to such policies and such imaginative approaches. What we're saying is, we need to speak up for consumer enterprises and people's livelihoods. We need to stand up for the livelihoods of the Chinese people, for the consumer sector, and for the many companies involved in food and beverage, cosmetics, and restaurants. These companies create jobs and support livelihoods. Take home original chicken. We employ over 20,000. Layoffs are always attributed to limited resources and supporting critical industries. But why do these companies suffer? Why can Xiangqian go public? They have unlimited resources and support. We really can't understand why our Chinese regulatory authorities impose so many specific rules on the capital market, engaging in excessive micromanagement and micro-interventions, interfering too much with the basic laws of the market, and getting overly involved in both the economy and the capital market. In operation, this often has negative effects and consequences, right? Take the registration-based IPO system, for example. Does the world implement it like this? As soon as we launched the registration system, everyone rushed in. Look at our star market, it's the same. Just look at how the star market has dropped. We have the Shanghai main board, the SME board, and the Chinex board, but that's not enough. So what? We created a little fourth board. The Beijing Stock Exchange, not taking off, there's no trading volume, and it hasn't achieved our original goals. After the new third board, we set up the Beijing Stock Exchange. As a result, I don't understand the difference between this new board and the Beijing Stock Exchange. How should a multi-tiered capital market be built? What's the purpose of creating many different boards? If we don't have an active, healthy, orderly, and steadily growing capital market, and if listed companies can't achieve effective development, then what's the point? If, in our capital market, out of more than 5,800 companies, half the profits are still concentrated in the banks, and our indices are all designed for these large enterprises. So after your index drops by 3,000 points and always stays at 3,000, it's no surprise there's a battle to defend it. But aren't the indices designed by us? Coming back to the question you raised, it still comes down to the quality of the companies, not enough large companies, not enough enterprises overall. We have no choice. We have to pick the tallest among the short, choose generals among the weak. We still have to select some of these companies. And these companies, indeed, in the past, due to an unreasonable industrial structure and an unfair distribution of industrial profits across society, among our more than 5,800 listed companies, financial companies and just over 30 listed companies account for half of the profits. Looking at this globally, the financial industry is a service sector. On what grounds does it make so much money? This is abnormal by any standard, and it's unhealthy. The reverse allocation of resources has killed off these companies. Why? Because everyone is discounting. They know your asset quality isn't quite what your reports show, and the so-called special state-owned stocks aren't all that special. Why is it that every time we engage in any market economic activity, it always ends up needing to have Chinese characteristics? Without adding Chinese characteristics, it just doesn't work. Without them, things can't be explained. Without them, we can't justify ourselves. This is actually very, very problematic. It's unreasonable, it's unhealthy, and it's very, very wrong to rely on these things. So what do we often overlook? The essence. That's why we need reform. If you want to reform, you have to change the industrial structure and achieve the separation of government and enterprises. We need to reform the relationship between finance and industry. The former premier discussed this. Even if finance generates $1 trillion profit, it's still not enough. So, in the future, as we discuss this, with long-term interest rates leveling out, China might end up like Japan, stuck in a prolonged period of low interest rates. As for how fast or slow this will happen, I can't really assess, but I'm actually preparing to write an article about it. I believe that in the long run, China's interest rates will trend downward, and it's highly likely that both the real and nominal interest rates will approach zero. So in this scenario, we'll see the long-term government bond yield curve flatten and move downward. The risk-free spread pricing model for financial assets will undergo fundamental changes. This will have a major impact on market institutions like us, public mutual funds, and especially insurance companies. Their pricing, their products, and their duration management will all face tremendous challenges. But why is this happening? On the other hand, it's also out of necessity, because the real economy needs it. Right now, the yield level of the real economy has dropped from 12% in 2012 to just 5% or 6%. Because in some months, it's not even profitable if you factor in CPI and PPI, it could even be negative. So what's the second important point? Well, it's that companies are not making profits. What's the third issue? The pressure from local government debt is huge. In the process of debt restructuring and transferring debt, the central government is stepping in to backstop, restructure, and reorganize local government debt during this process. It is inevitable that the burden must be reduced. So, cutting interest rates is a very, very correct choice. These changes are all structural and long-term, and their impact on the capital market is profound. Although they bring a positive aspect to the capital market, since interest rate cuts are generally favorable for the capital market. When interest rates are raised, it's a blow to the capital market. It's very likely that, after 5 to 10 years of diverging monetary, exchange rate, and interest rate policies between China and the US, we may now, for the first time, see the possibility of moving in sync and in the same direction. So, how should we take advantage of this opportunity? The space and opportunities for monetary policy. Previously, because the RMB was a high-yield currency, we've been facing this challenge since 2015. Personally, I believe that for as long as 8 or even 10 years, the monetary policies of China and the US have been completely opposite. When they raise interest rates, we cut them. When they expand liquidity, we tighten it. People say that the two of us are going in different directions. This has put enormous pressure on our economic life and macroeconomic regulation. Now, for the first time, we might end up on the same path, at least in terms of necessary policies, because the US dollar interest rate hikes will continue until the end of this year. By year-end, though the US dollar remains strong in this systemic environment, it will bring a historically rare long cycle. I think it will last 6 to 12 months, likely 12. The US won't easily give up this chance to acquire assets globally, so they'll likely keep interest rates high longer, especially since US employment is very strong. Overall GDP growth is quite good, and the two leading indicators can offset each other. The US economy is truly resilient and flexible, which puts a lot of pressure on us. So, in our case, the environment for rate cuts may arrive relatively quickly, and it's even possible that the cuts will be faster and more abrupt than we expect, something that could really surprise us. In such an environment, what role does the capital market need to play? It becomes a very important lever, serving as a support and a reservoir for liquidity.